Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. Today, I have a great show for you. I have Scott from Smash the Bid on. He's going to talk about how to build a trading system that works for you. This is going to be a good one, I think. Okay, so today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading CME Group event contracts. That's what we're all using at Place Your Trades. The PYT team is going to Las Vegas to be at the Money Show on April 24th through 26th, so I hope to see you there. Hi, Scott. Thank you so much for joining me today. I appreciate it.
Hi, Julia. Thanks for having me.
I've been following you for a while, and I'm interested in what you have to say, because when I first started trading, I did not find it difficult to win. I also did not find it difficult to lose. What I found it difficult to do was to win consistently, right? And then that's really, in my opinion, what being successful intermediate and longer term is. You can hit one great trade and make a ton of money and never trade again. But if you want to trade for a living, I believe that the key is consistency. So when I started, reading your feed and understanding sort of what the kinds of things you do are to build a system, I thought, you know what, let's share this with people like me who are interested in how to become consistent as soon as possible. We put together a visual for you guys because we didn't want to just talk and then have you not be able to sort of get what the talking points were. And I wanted to make it the best use of your time. So I took what Scott DM'd me, I made it into a little slide, and I thought we could go through each one and sort of figure out then, from scratch, how somebody could build a trading system.
Okay, so first, like you were saying about the consistency, it's one of the reasons that I found early on in my trading journey that I needed to build some kind of system. I have a systematic type brain anyway. It wants to systematize everything, even the fastest route between here and the truck, or from the parking lot to the mall. It's just how my mind works. So to get consistent, I had to kind of get rid of some of that human element and try to just build something that's very exact. So things like, I've struggled with trend lines. They're very subjective. You can snap it here, you can snap it there, fibs. You can snap them all over the place. It's all very subjective. So
You're right.
So I went out looking to define a system, and I found that I had to define everything. And that's where the number one comes. I have to define everything. So for me, like price action is like reading a book. It is now. I didn't start out that way, but defining every single, open, high, low, close. What does it mean? And I say this a lot with my setups. Okay. There's no setup until the candle closes. So price action is defined at the end of the candle. When that candle closes, and this could be any time frame, right? It could be the weekly, the 240, two of my favorites, the 60, my favorite, it doesn't matter, but it has to be defined. And so there's an exact price, an exact number, an exact stop.
I just want to take a moment and just really sink that in, because I feel the same way you do about candle closes. Because I trade intraday, I use weekly and also hourly levels, but I trade based on the close of those candles, not based on necessarily the high or the low, the wicks of the candles. But for me, it's all about the closes, because so many times in the middle of a candle, I'm sure everybody experiences, they trick you, right? Like in the middle of an hourly candle, they could be at a high that then could not even be important by the end of the candle. So it's so important to wait for the end of whatever the time frame candle is that you're talking about.
Absolutely. Okay. So, that's how I get my setups, right? My setups are, I'm trading off once the candle closes, there's, previous candle highs, big breakup. So there's different price action, right? We're either going to be trading a breakup, breakdowns, or consolidation, or reversals. Those are the four types of price action that I have defined. So every trade I take is going to be somewhere in that. Well, I can develop rules around that. I can say amount of risk, my stops, all of that based on what am I trading. Trading consolidation, you can usually get really tight range, really tight stops, bigger size, because I'm just trading a really tight consolidation range. Continuation might be a little bit riskier. Reversals are my absolute favorites. They're a little bit tougher to take. So might take a stop or two, nailing those, but the risk reward is so great. Just defining all four of those and which type of price action I'm trading is important, helps me size. And then with that, like number 3 here, we're talking about the criteria. I just call it criteria. It's like reasons to take the trade. I'm looking for as many reasons as possible to take the trade. So for me, I use the multiple time frames. Like the weekly is one of my favorites. I think that's where the biggest money lives. But to execute and to really get a good, tight, exact entry with an exact stop and really tighten that risk up, but yet catch a big weekly move, got to go to the lower time frames. And so the way I like to do that is I'll see that same setup across multiple time frames, and I can score it with every time frame. So if I see it on the weekly, then it sets up on the 240, then I see it on the 60, especially the 60 is one of my favorites. And then you get down into the 30, the 15, and even down to the 5. And all of these time frames are lining up at the same spot. Those are like the juiciest trades that you can possibly get. So I use those to score them, the number of setups that across multiple time frames. I can score it and say, hey, look, that's a 10 right there. And then you have all of, whatever your favorite moving averages are. Some people use RSI, whatever. The fib snapped over the whole move and it hits the 50 fib, whatever it is that you're using, bring that in and allow that to score that trade. So multiple time frames, for me, a 920 cross is a great one. So if we have multiple time frames, we set up, we get a 920 cross on the 15, pulls back into a previous candle high, so forth. I can score that with like 10, 15 reasons to take this trade.
So I have a question. So I'm putting myself in the mindset of somebody who's just starting here, and a lot of things can be very overwhelming. Or somebody who's been trading for a while and is still like, the way that they trade is a little bit nebulous. So is a good idea then to have like a sheet of paper, or to basically write out what you're looking for in terms of the setup? Is that what you would recommend somebody do? That they would say, out of all of the things that are going on, these are my 3 favorite setups. And then for each of the 3 favorite setups, have whatever these criteria are defined for each of them, and then be able to literally like check them off. Is that something that you would recommend that somebody does?
Absolutely. In fact, I have it in a spreadsheet, all the criteria in a spreadsheet, and you can actually check it off. Some of them are weighted higher than others.
Okay. Yes. And that's part of your system that you developed. Okay, got it. I actually don't have that. It's all in the Cordova brain, but you know what? I should do that. I should. Well, I mean, I know I've been doing it so long. I know what's more high probability versus low probability. I try to tweet about the higher probability. But you're right. Yeah, I should do that. I'm going to do that.
Well, and it's a good actionable thing. It helps slow down. I use it for teaching. So I'm with you. I don't really use the spreadsheet anymore, to be honest with you. I don't have to score it. That's all up here. But I still use it as a reference a lot because it's really good for younger traders. They get caught up in the price action. Every close sucks them in, every big dip sucks them in. But this way they have to slow down, score the trade, take the time to say, okay, where's the setup? And things like if you're using a 5 or a 15-minute chart, even that low of time frame, I call them like standalone 5-minute setups. Stay away from them. If you don't see it across the 15, the 30, the 60, just stay away from it. It's a standalone 5. That's another one that's really actionable. So that checklist gets you in that state of mind to where you go through and you're looking at all of these things. I look like a pilot. You got to go through your whole checklist before you punch it and start to try to take off. And I think if you can slow down and look at that, especially in younger traders, if you can slow down and take a look at all that stuff.
Yeah, that was genius what you just said. I wasn't a younger trader when I started, but I was obsessed with the 5-minute. And I didn't want to look at hourly or daily or weekly. I was concerned. I wanted to make the trade right then and there. The setup was on the 5-minute. I would take it and I would lose. What in the world?
Right. It looks so pretty.
Yeah. So what you just said makes super much sense. And it's hard to pull yourself out of that, because one of the things you want to do, you want to press a button. Like, it's so hard to wait to press the button. But I love that you've created this system where people are forced, before they take the trade, at least until you're consistently profitable and have the thing up here, have the whole matrix up here. I love that you've done that. I write down things every weekend. I'm forced to really plan out what I think and what I say. And so I love the idea of everybody writing their own and then looking at yours and comparing it, how did I do? And I love that.
When I talk about young traders too, I'm talking about, you could be 50 years old, but it's your first year of trading. right? I
I
say
know.
it a lot is like it's like dog ears. Traders are like dog ears, you know. It's like
Oh, it's true.
every
It's I
7 years.
No, you're exactly right. I used to actually travel a lot, and I used to think, oh, this traveling is aging me because all the airplane air and stuff. I was like, this is not good. But then when I started trading, I was like, oh, that was nothing.
Right.
Like trading because the facial expressions probably that you go on throughout the day, like what? Like,
Right.
I'm sure those aren't good for your
Yeah. Well,
anyway.
and then
Okay, sorry.
1 year is like 7 years of your lifetime. Is the way I look at it in trading. That's when I talk about younger traders. So 1 year is 7 years. So when you've been trading for a year, you're actually like a 7-year-old. Would you trust your 7-year-old with your money? Not yet. After 2 years, you're 14. Maybe at that point you're capable, but you're still really volatile, right? And
Yes.
there's a lot of truth to it. Not for everybody, but it's a good 80% of the crew reference. So I use that
You
a
know,
lot to kind of help people realize where they're at in this journey. It's not easy, and it's not
I,
fast. It seems to
and
be.
it seems to be, and it doesn't matter how smart you are.
It
It
does
doesn't.
not matter. In fact, it's usually more difficult if you're really smart.
That's the problem because you think you can outsmart the market. You can't just like sit there and go, okay, price is going up, so I'm going to go with it. You have to go, well, I'm going to catch the top end, then it's going to go down. Like I still do
Exactly.
that, but
This has to go here. It has to go there. I know this.
oh, that's the worst. I have to tell you, whenever somebody on my feed says something about it's definitely going to happen, I think to myself, oh no.
Right?
They are super wrong about whatever it is, unless even no, because if the person's been trading more than 3 years, you would never use a term like definitely.
That's what I was just going to say. That's a guarantee. It's a young trader right there, right?
Yes, yes, you're smarter than that because you know that you can get effed at any time for any reason, no matter
Oh,
what.
yeah. I don't care how long you've been doing it. Nobody knows where the market's going. Nobody. You
And
just,
if yes, it's so
yeah.
funny you say. Yeah, I feel the same exact way.
Right. So there you
Yeah,
go. That's where the system comes in and where it really helps make things a little bit more consistent, make things quite a bit more consistent is the market profile, especially the option flow. Since they went to all week zero DTE options, it's changed the overall SPX, the way the SPX trades a bit, the way ES trades a bit. I think it's being used to hedge more now than ever. It's a lot wickier, it seems, than it used to be. I don't know, but it's definitely changed things. So
I
watching for that
agree.
option flow is another big one. Not just the volume profile, but volume at price, but also option flow is huge right now.
So the things that you look at on a day-to-day or time frame to time frame basis, you look at MAs, you look at option flow, you look at volume profile, and any other big things that you look at just in general when you're just glancing. Like if I were to say, hey Scott, what do you think of this chart? What are the things that I would put on it? Are those the things, the MAs, which MAs do you like?
I just have three. That's it. I use the 9 EMA and then the 20 simple and the 200 simple. That's all I use.
Oh,
I'll throw a 50 and 100 maybe on a daily, just to kind of get a institutional feel, where we're at as far as a lot of institutions will use it. But all of these that we were talking about, they're just criteria. I like to strip everything off my charts and I like to just read price action just as it is with nothing else on there. All of my setups, if I'm going to enter a trade, I have to have a setup. And you can take all that stuff off the chart, nothing but the candles. That's where the setup comes from, right? And all the other stuff is just reasons to take the trade. It's just criteria. Do we get a 920 cross, or are we pulling, after a big dip way below the 200 on the 60, and we rip for 2 days all the way up into the 200 on the 60? That's usually a really good short, at least the first tap.
yeah.
But I still want to set up there. I don't just short the 200. I need a setup there as far as the price action goes. And I'll go to lower time frames to give me that setup against that higher time frame setup.
Okay, and then what about size? Because I found that very difficult too when I was a younger trader. The more confident I was about something, the more size I'd want to go in with. But almost consistently, I would be wrong about whatever I was confident about. And then most of the trade would come, like it would hit my stop exactly. And then whatever I expected to, or whatever I thought might happen would happen. So I sort of learned after a while, especially my young trading brain, I was like, I need to put in 1/3 or 1/4 and then put in 2/3 and 3/4 at my stop And that way it's as close to being wrong as possible. And then I've got an easy out and I'm losing less money too. Do you do something similar to that with size?
I do. I do the same thing, especially if I don't have the criteria that I need. There's certain criteria that I'm looking for if I want to put on size, and I'll be looking at a favorite level. Like right now, NQ pulling back into 13154. 13154 is a really key level for me. It's part of my system. So as we pull into this 13154, if I don't see the things that I need to, if I don't see some option flow come in, if I don't see some size on the bid or a light bid with no selling, there's just certain things that I'm looking for, certain criteria. If I can get that, I'll put on a full-size trade right there all in one shot. If not, then I'll do exactly what you're talking about. I'll just start with a piece. Then once we get that break up from there, then add to it, on the next pullback I like to use like the 5-minute chart for ads. I like that.
Yeah.
So like right now we're at 185. So if we close here and then pull back into that previous candle high right there, that'd be a good ad spot for me if I was already long that level. So.
Okay. Guys, just so you know, we just chatted for a couple of minutes before the show started, and Scott's like, "You're not trying to catch this, are you?" And I was like, "No, I shorted it this morning." So what I did was I put in my stops. I'll be very happy, I think, no matter what. Right. And it's really nice too, I think, when people can trade in opposite directions and still we're all good together. So,
well, I was short earlier too, so I'm with you.
Yeah. So I'm
an intraday trader right now. I'm not really swinging anything because this market has been so up, down, slap around. It's just,
I know
it's on crack. Does
it remind you of COVID? It reminds me of COVID a little bit, like the huge swings. Even though it's going in a general direction, it's just it is hard. I agree to swing anything.
Yeah, I think there's like bag holders at every single level. So as soon as we get there, they start selling into it,
Yes.
Yeah, there's a lot of great intraday opportunities. Makes the swinging a little bit more difficult right now, but that's all right because there's a lot of volatility during the day. So.
Yeah, and sometimes I even trade against myself. I'll have one position on in my investment account, and I'll know, okay, you know what? I think I'm right longer term, but in the meantime, I'm going to scalp against myself just to basically essentially hedge myself, and also I hopefully win in both directions. But yeah.
I'm glad you brought that up because that's the next one, like the trend definition. What I like, my trends are defined. What I define as a trend is exactly defined. Okay, I know this is exactly what a trend is to me. So if I'm trading with the trend, which is the majority what I like to do, is trade with the trend. But I do have counter trend trades. I love counter trend trades, but they have separate rules. So I trade them differently. So what you're talking about that's brilliant. That's what I like to do. Like I like to use the micros and the minis. So I might be short the micros and then get long the minis for just the bounce. All I'm looking for is that bounce, right? And I'll get long the micros and stay short the minis. So
I do that all the time. I do that all the time. Yeah, I freaking love that strategy.
Right?
So let me ask you, because I remember having this question, and I thought it was a dumb question, and now I don't think it's a dumb question, but it sounds like a dumb question. How do you know what the trend is?
Okay, so like I said, as far as defining it, this is what I suggest. Okay, I can tell you exactly how I defined a trend. I can tell you that.
I would appreciate that, because I think probably everybody else has different, you could look at different time frames and say different things, right? So It was so confusing to me when there's like, don't trade against a trend. I'm like, what are you talking about? I'm totally with the trend. What are you saying?
What are you saying? Okay,
yeah.
Right. So I'm looking at the weekly for anything big. If I want to swing anything, I'm looking at the weekly. Okay. And the weekly has been in a negative slope. It's been in a downtrend off of 4,800 or whatever it was. Yeah, 4,800. Right. So we've been in this downtrend. So if I'm swinging anything, it's either got to be at a really, so by the trend definition, as we're coming down from the highs, right, we start setting the higher highs, lower lows, higher highs, lower lows, right? So anytime if I want to do anything long, it has to be on the very far extended end, low end of that. The rest, why bother being long when you're in this negative trend? If you can get short the top of the trend, then time is on your side. If you're going to swing it, like if it dips and it consolidates and it just goes sideways, it doesn't have to bounce, right? It doesn't have to bounce. It could just dip and just consolidate, and then hit that calculation, hit that area again, and dip again, right? So I always want to be short on the big picture of the negative slope. So I use the weekly to really define like the big trend. And then the 240, the 60 is my favorite. I'll use the 60, and I'm looking for the trend on the 240, and then inside the 240, I'm using the 60 intraday. The 60 is my favorite intraday chart. So the 60 will give us a trend for 3 or 4 or 5 days, 6 days, 10 days sometimes, and then it's usually pulling back into something. So one of the easiest ways to do it without having a chart to show you would be just looking for like a 920 cross. I use the 9 EMA and a 200. So if you look at NQ right now, we have a flat 9, right? It's nice and flat.
What time frame? I'm going to do it with you.
I'm sorry, 60 minute on the NQ right now.
Okay. I love the 1 hour. All right.
Okay, cool. Okay. So you see right now the 60-minute 9 is pretty flat, but it's still turned down. It's still negative slope. Okay, I calculate the slope on that 9, so it's in a negative slope right now, and it's broke the 20. So now we have a 920 cross, and now we popped right back up into a short setup, right, where you were talking about short this morning, right? We got a nice short setup. Now that we have the 920 cross, we're just set. I'm just looking for shorts. That's it. That's all I want to do is look for shorts. If I'm going to do a long, it's going to be a counter trend rule. If you get that NQ and look at the big picture, you can see consolidation basically between 13,000 and 12.6. And we were in consolidation for a long time. I don't know, 5-6 days. And then we finally broke out of it, right? And here we broke out of it. Now we're going right back into consolidation. So right now the trend is still up. We're just flattening out. I don't know. That's why I said that level I was talking about is like, that's my consolidation level.
Gotcha.
13,154. It needs to break that to actually break down. If it doesn't, it's just in consolidation by my rules. So we're just in consolidation between that 13,154 and then the high. And I'll just trade it like that. I'll trade the low, short the high, trade the low, short the high until we get out of it.
I do the same thing. I feel a little bipolar sometimes because I can feel one way for the week, but I'll definitely take a counter trend to myself beforehand. Okay.
There you go. Yeah.
But I love what you're doing because I like chart the weekly and then I put them on the hourly as like horizontal lines. So that I can see, because it's weird how useful I think some of the bigger levels are on the smaller time frames. They're really helpful to me. But I think I like what you're doing too, and just looking at those MAs and trying to figure out from that sort of where we are in the range and in the trend. I love that.
The weekly is like my favorite.
I just thought back to what you said at the very beginning, that trend lines and fibs are subjective. I never understood, especially I still don't understand. Some people think that my lines are fibs. I don't really understand how to use fibs, only because for me, it's like, well, what low are you taking that? And what high are you taking that from? It could be anything, anytime. And there's like a million different fib lines. I never even understood that. But the MAs are not subjective. They're always what they are.
Right. Exactly. Yeah. And so to me, they're a little bit better tool. Whereas, the trend lines and the fibs, of course, they can be used as part of a system, but you have to define it. You can't just snap it one way today and another way tomorrow, and then, blah, blah. You can't. You've got to define it. Like if you're going to do the fibs, it has to be from the pivot high to a pivot low, or, whatever it is. But you have to define it and do it consistently, or to me, it's just never going to work consistently, It just has to be defined. I think it's the biggest thing with the system. I like to look at it like programming. I'm a programmer. I'm not a really good programmer, but I'm a programmer. So I have programmed my system. Like everything is programmed. I've written a bot to trade it, still working on it. It's not mastered or anything because like I said, I'm not that good of a programmer. But what it's done for me is it's forced me to define certain parts of my system, that weren't necessarily, there were still some gray areas. So what I did is like, it's still defined, but it was defined as random. Okay. So it's like, how do I know what this? I don't know. It's random. I just call it random. So until I figure out something else, this piece is random. And so part of my system is just randomness. But in time, when I start programming it, I was able to cut out that 20% randomness. And now it's about 5%, like 95% of it is exactly defined and programmed that way, So programming, I think for anybody is an actionable item that programs. When you start programming, it really forces you to define everything. You can't program it if you can't define it.
I 1,000% agree with you. Like if you can't write down a set of rules that could be programmed, even if you're not a programmer, then it's not necessarily a system. It could be an art, which is okay. Right. Like there are some of us that are good at art and some of us that are like crayon like I know I'm terrible at art, but yeah, you're right. It's if you can't write down specifically enough for somebody else to do exactly what you do, then it's more art and less systematic.
Yeah, I like that. I like that. And there's nothing, like you said, there's nothing wrong with the art. It takes a lot longer to become a good artist, right? It takes a
Yes, it takes
long time.
hundreds, I was going to say hundreds of thousands of hours, but it feels like hundreds of thousands of hours.
It does.
It just takes a lot of screen time, and it takes a lot of experience and a lot of going through. That definitely will happen. Oops, no, it won't. It takes
Right.
takes saying definitely at least 5 times before you realize, no, it won't. You have no chance. It's not definitely nothing.
All right.
Yeah.
So true.
So that's I love that. So it's, yeah, the art is okay. Well, as long as you do have rules about stops, even when you're doing artiness, you could do
Right.
some artiness, but then still have rules about stops. I think today might just chop around. I don't think we're going to get a straight trend day one way or the other. I think you're right. I think it's because we had such a big trend day on Friday. Today seems like it's going to go.
Yeah, it looks like
I
it.
think
Yeah.
I think so.
So
I don't know.
that's a good point. You like what you're talking about right now. So this is one of the things too that I've learned over the years, that I don't, I can look at this and say right now it just looks like it's going to consolidate, right? But we know that can change in the next 10 minutes, right? So I look at it right now and I see, just by definition, we're in consolidation between two of
Yep.
my favorite levels right here. So yes, absolutely. And this is why I'm not a predictive trader. I'm a reactive trader, like that's, if we break down, I want to be short because I think we can go all the way back to 13,000 to test that consolidation level, And so
Yeah.
it's kind of, it's for me, it's always like an if then too, it's like, I like it here if it stays here,
I'm gonna give myself a pat on the shoulder for asking you to be a guest, because it feels like our levels are very similar. I mean, for me, you were looking at the 13,154, I think, and one of my weekly levels this week is 13,196, and so we're below that now. But then I have that if we continue to sort of close below that, we could absolutely get to 1380 or so.
Yeah.
Yeah.
Nice.
So,
Yeah. I love your charts too, by the way. I'm a big fan. I didn't say
oh
that
my
when I
gosh.
got in here, but I'm a big fan. You do a great job.
Oh my
Seriously.
gosh. Well, thank you. It's funny. Whenever I include charts on my tweets, I don't get many likes. Whenever I want to keep the likes down so that I feel like it's like, I'm being a contrarian, I just include a chart with it. And that keeps it all down. Whereas opposed to just saying a level. I don't know why. It feels like somebody would want a visual, but I think because my charts are weird looking, they don't like them. But that's okay. Anyway.
I love all the nicknames too, by the way. I love all the nicknames
Yeah.
and all the stuff. It's so cool.
That's so nice of you. So we talked a little bit about some of your favorite setups. We talked about trend, which is nice. What do you think is the most important thing for somebody who's just starting out, maybe had some mild success, maybe had not mild success? What would you tell somebody who's sort of like just starting out, just wanting to start becoming a professional trader? What do you think the steps are for them to get there?
I think stop trading and start watching. That's my opinion on it. Seriously. If you can watch, like, it's really hard to learn, or it's really hard to understand things when you're emotionally attached to the trade. If you really want to do this successfully, you don't have to lose money for a lot of years to figure it out. You don't. Watch for a little while. Watch. I didn't take a trade for 2 years. I mean, I was working in the oil field, but I had my computer up all the time. I was watching from sun up to sundown, my mind was in the market, but I didn't trade anything. I think that helped me. It helped me a lot, because by the time I put on a trade, I felt like I had an understanding. It didn't feel like a 50-50. And when you're young, I think all you can see is the dollar signs. It's like, yes, if this works, I'm going to do this, but they don't see what happens if it doesn't work. I think strip your charts, learn, define price action, define it. If you don't have a definition from it, learn from somebody, but define it. Take some time to learn. This is a long game. This is a marathon, not a sprint. And the ones that want to come in and just hit it big, they might. And there's a lot of people that get some, what I call fool's gold, like it happens, get a lot of money really quick, but they usually lose it just as fast or over time and go back. I meet a lot of people like that have finally tired of getting butt handed to them, you know. So you don't have to lose money to learn.
I really wish I had listened to that advice when I was starting, because I had my account. It was sizable. It was way too big for somebody who was just learning. And I told somebody once how much I made on a trade, and they were like, "Oh my God, you're so good." And I'm thinking, haven't told you how much I lost though, because if you post a huge win, I'm not going to say how much it was. It's a little obnoxious. If you post a huge win, then people think you're successful. But in order for you to have made that much, you are absolutely risking enough to have lost at least twice that much, right? Like
Absolutely.
that's how it works. So I don't necessarily trust people who post those sorts of things, because if you can make 100 grand on a day, you can lose 100 grand plus on a day. That's just how it works, you
Yeah.
know?
Yeah. And you better be trading like a $10 million account if you're putting on that kind of risk.
Exactly. But yeah, so I wish I had listened to your advice. It was so hard to hear. Somebody did tell me that. They're like, well, maybe you should, just take a step back. And I'm like, no, I'm smart. I'll make it. Rah, 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 rah. So I really wish I had listened to the advice that you just gave. I don't know how to drill it in, or just dial it down. Like, one thing I do like about these event contracts is they're so freaking cheap. Like you can, they're under $20, right? And so it's like you can trade and get the flavor for something before you're putting in hundreds and thousands of dollars, and just you can define your success based off of just one of these little deals. That's why I like them. They're so cheap.
Yeah,
Right?
and that's a really good way of saying it. Period. Like the micros, they're like a
Yes.
$5, a dollar
Right.
25 per tick.
Yeah. And that's okay.
Right. Learn how
That's
to
okay. Yeah.
exactly.
Like yeah,
Exactly.
no, I'm not embarrassed about that at all, especially because, trading the micros, because for me, I like to scale in and out. If you're trading a bunch of the minis, like, I don't know, it's just my heart.
Yeah,
So
that's important, right? It's important.
it's important for me, especially the way I trade specifically, for me to manage. I sometimes I roll the minis or micros. I roll the micros all day long. I'll sell three, buy back three here, sell four. Like I'll roll them all day long. So yeah,
Yeah.
no, but yeah, there's nothing to be ashamed about trading small at all, at
Mm.
all.
Right. In
Even when
fact, that's
you
the way to start. That would be my second next thing to tell someone, to starting
okay,
out is if you just can't and you have to trade, and you just can't sit on the sidelines, then trade
I
something like the ES micros. It's $1.25 per tick. It's $5 per dollar. Or you can, if you want to learn some options, you can do SPY options, and risk 30 cents. Like right now, I'm risking 20 cents per trade. That's it with one contract. You can risk $20. That's what you're
yeah.
risking. And if you're right, you might make 60. You're not going to make a bunch of money, but you're not going to lose a bunch. You get to
Yeah, no,
learn how to trade without going broke, right? That's
I love that. And I have somebody in my group who did, for like, literally, this person paper traded for 6 months minimally and logged every single thing. But before they started trading with real money, which I really admire. But I will say, just for me, and I don't know how you did, because for me, when I haven't ever done it, but I felt like I needed money in there. I felt like if I didn't have it, I wouldn't be emotionally invested, and therefore I'd probably be a better trader. But I figured I needed to do it with real money. So yeah, I like your idea of starting small. I love that. What you're saying is, if you can observe and take the time and basically log when you're able to be consistent about the trades that you would have taken, what you would have done, and then go from there.
exactly. I like even just ask yourself if you're new, ask yourself before you put on this trade, is it a 50-50? Like when you put on this trade, you're like, I have no idea where this trade is going to go, but it looks like it's going to do this, and if it does, I'm going to get paid, right? If you're feeling that way, then it's time to step back. And if you have to trade really small. When you've done this long enough and you understand it and you have a system that you find that works for you, or you build a system that starts working for you, whatever. When you've done this for a little while, there is no 50-50 trades. Every time I put on a trade, I have a reasonable amount of confidence that this is going to work, period. And if you have any gray area at all, just step back, just step back. It's okay. Just take your time. No one's going to learn this overnight. I don't care how smart you are. We all come in thinking that we're the exception.
We're like teenagers when we start. We're like, nothing can stop us now. We know everything. Yeah. It's okay. I love every single thing you've said. I know it can always be reinforced in my brain. I think you're amazing. I love your work. I love following you. He's at Smash the Bid on Twitter. Scott, I really appreciate this. This was useful to me. I hope it was useful to other people as well. And everybody, if you'd like to follow Smash the Bid, I would recommend it. I am Cordova Trades, and please follow Place Your Trades as well. I hope you have a great trading day, and it's going to be an interesting week, I think. So talk to you later, everybody. Bye.
Thank you, Julia.
Thank you, Scott.